Hi, traders. Welcome once again. Welcome to another live Q&A session with Oliver Velez. Of course, my name is Oliver Velez, and I'm your trader for life. All right, I hope you're all doing well, and I'm truly hoping that we get through this without some of the technical difficulties that we've had. But I will tell you up front that if we start having technical difficulties and I have to close, I will be back at 4, okay, at 4 p.m. Eastern Time. That's New York time, okay? So I will get this done. That is if we have technical issues, okay? I'll come back in 2 hours, 4 o'clock, for our live Q&A. All right, but I hope you're all doing well. I hope your trading's gone well. I hope you had a wonderful extended weekend, and I am ready to take some of your questions. Okay. Danish here is asking, Oliver, do you think algo trading is good? I think it's neutral. I think what you're asking is it good for traders that aren't algo trading? All right, algorithmic trading. Is it good for the market? Is it good for us? Yeah, I mean, I think some people have this view that algorithmic trading sort of makes trading by individuals more difficult. That's not necessarily true. Algorithmic trading adds liquidity to the market. It can help to add a little bit of volatility, but volatility is neither good or bad. It's neutral, like anything else. So I don't really see algorithmic trading as a problem. I used to actually have 14 different algorithmic trading programs running in the market without any human intervention at all times. It did require quite a lot of programming. It required a lot of tweaking, and I don't run those algorithmic systems now just because the market's become so much more efficient. So we were trading between the pennies, if you will, and it was basically just a race for liquidity with our algorithms. But today, there's a tremendous amount of algorithmic trading that's going on, and I actually think it helps the overall market. It helps, drive liquidity. Every market player wants a liquid market. All right. Jay's asking, Oliver, which course would you recommend? Live trading camp or self start? Okay, so look, my live trading camp is coming up online this weekend, right? That is my baby. Okay, and what I mean by that, that is the crowning jewel of my trade the open approach, trade the stock market's open approach. So my live trading camp will focus on you trading the first 20 to 30 minutes of the trading day and not needing to trade beyond that. You can trade beyond that, but my specialty is very, very quick profitability right off of the open, and I want all of my traders to have that skill so that they're off to a very powerful start in the first 20 to 30 minutes of the trading day. Many traders do not trade beyond that, whom I teach. Their whole goal is to be done 10 minutes, 12 minutes, 18 minutes, 20 minutes, out, finished. That's what the live trading camp focuses on. And it's an 11-week program, okay? Very powerful. But it doesn't come with any funding. So if you're looking for lifelong training and funding at the same time, right, starting with a $50,000 trading account, then the self-start trading program is definitely for you. All right, so different. You really should do them both if you can. But if you had to choose, you have to choose based on, do I need funding? And the self-start program is a program for life, whereas at the Live trading camp is educational over 11 weeks, and that's it. Okay. All right. Caesar's asking, Oliver, would you say that to a starting trader that is scared of trading in today's markets, what would I say? I was actually talking about this earlier today with some of my newer traders. This particular trader has been going through the education for 2 months, but has not placed a trade yet. And the person told me that he was scared. And the first thing I'll have to say is that you can't study your way to being a good trader. So remember, the only way you're going to do this is that you've got to trade, and you've got to trade a lot. You've got to spend a tremendous amount of your life inside of trades. All right. And those trades are going to be winning trades. Those trades are going to be losing trades. You need them all. All right. But you're not going to progress reading, studying charts. All right. Listening to lectures. Those things do have a value, but they don't have a value toward your progress. They only have a value in that it helps you prepare to start building your experience. But preparation, if you stay in the preparation phase, you're not making progress. All right. My program allows you to get this necessary experience under your belt without destroying your family, without destroying your finances, right? Because you're going to need to trade a lot. You're going to be bad at it at first. This is normal. You're supposed to be bad at it. We're bad at everything we start, but especially with trading, you're supposed to get the losing out of the way in the beginning. And you can't be afraid to do that. I expect you to do that. You're supposed to do that. And this is why I encourage traders, don't use your own capital. Nobody on Wall Street does that. If the professionals don't do it, you shouldn't be doing it. If you have the ability to trade someone else's capital, trade someone else's capital. You're held to a higher standard, and statistics show that you're better when it's not your money. Traders are better when they don't trade their capital. Billionaire hedge fund managers trade other people's money because they need other people's money? No, it's because statistically they understand that their actions are held to a much higher standard if all the money's not theirs. All right, keeps them sharper. It keeps them more on point. And you should do the same thing. You're a far better trader trading my capital than you are trading your money. You're not quite as intelligent and quite as bright and quite as disciplined. But with my money, you're a lot more careful. You don't want to disappoint. You want your record to show you're held to a higher standard. But you've got to get in there and trade, guys. Your success is on the other side of a whole bunch of experience. It's not before experience. So you've got to focus on getting tens of thousands of trades under your belt. And a good portion of them in the beginning are going to be terrible trades. But that's what it takes. You know, you are going to lose at first. It's just the way it is. All right. And so you've got to find a way to get around that fear and press those buttons, get in trades. Your progress clock is ticking only when you're in a trade. And the moment you exit a trade, there is no progress made at all. I don't care what you read. I don't care how many courses you take. You are making zero progress. You can only get this inside of trades. You can only get this trading. That is it. All right. And when you have gotten to a place where there is nothing the market can ever throw at you that surprises you anymore because you've seen it thousands of times, then there will be no fear. Do you understand? There will be no nervousness, because nervousness comes from the unknown. Fear comes from the unknown. But if you know every possible scenario, every possible thing the market can ever do to you, because you've seen it thousands upon thousands of times. It loses its ability to frighten you. It loses its ability to throw you. Do you understand? Been there, done that 10,000 times. All right. And all you have to do at first is focus on getting your losses under control. And when you get your losses under control, there is absolutely nothing to fear. And what a lot of people don't realize is that it's not the market that you fear. You fear yourself. You fear that you won't do what you're supposed to do. You fear that you won't keep your own word. The market's neutral. It is nothing to fear. But you actually fear that you are going to mess up. All right. And the way you do that, the way you handle that is get a solid trading plan. Follow this plan with the focus of keeping your losses under control. And there's nothing to fear about. There's nothing to fear if you do that. All right. All right, Pirate Bull is saying, how is Bitcoin supposed to be a hedge against inflation? All right. But yet it's following the stock market. Yes, that's a great question. Bitcoin is an inflation hedge over a 4-year period. There's a lot of noise from 4-year to 4-year to 4-year periods. All right. You have to think 4 years when you start approaching this asset. Okay. This is mathematically baked into the Bitcoin protocol. So you judge it from 4-year points, right? You follow what I'm saying? So you judge it from 2012 to 2016, 2016 to 2020, 2020 to 2024. Now, when you connect those dots, if you will, those 4-year dots, it's a freaking straight line up. And that is an inflation hedge. So over 4 years, it not only maintains purchasing power, it creates wealth. All right. Gold has been a maintainer of purchasing power over the last 10 years. But over the last 10 years, Bitcoin has been a wealth creator, and it has outperformed every asset on planet Earth. It was the fastest asset to reach $1 trillion at one point. It's the fastest growing protocol the world has ever seen. All right. And it's the fastest adopted protocol, the fastest adopted technology that's ever existed. And it's the only network in the world that's never been hacked, ever. Not even once, not even a little bit, never. So you have to, excuse me, guys, you have to step back and always remember that Bitcoin is a 4-year asset. It has never and probably never will fail a 4-year period. But in between, it doesn't appear to it doesn't appear to have inflation protection because of its volatility in between those 4-year points. It also appears to be correlated with the stock market. But it's not correlated when you go to 4 years. It's correlated moment to moment sometimes, period to period sometimes. But that correlation breaks at one point. And if you measure from a 4-year point of view, it has zero correlation with the stock market. All right. We're so short-term oriented, guys, in our thinking today. It's crazy. All right. Good afternoon, Oliver. I wonder if for those who operate currency, in the dollar's case, has any specific characteristics of the assets huge from Brazil? You trade a currency. I'm not quite sure what you're asking, though. All right, guys, look. What I teach my traders is universal in its application. The tactics and the techniques that I teach my traders can be universally applied across all financial assets, meaning it doesn't matter whether you're trading the dollar, a currency, a forex pair, whether you're trading an options contract, whether you're trading in equity, whether you're trading a cryptocurrency, it doesn't matter. All right. My tactics are based on basically the psychological shifts between fear and greed in the markets. And these shifts between fear and greed in the markets, they exist in all markets. All right. And that's what makes it universal. Not only are the tactics and techniques universal across all markets, it's universal across all time frames. So my tactics, if you apply my tactics and techniques to a 1 minute chart, it'll work there. If you apply it to a yearly chart, it'll work there. Weekly, it'll work there. Daily, hourly, 5 minute, 2 minute, it doesn't matter. All right? Because again, all my tactics are designed to do is to teach you how to find that shift. When does fear stop in the market and pass the baton back to greed? That moment where fear was running with the baton, fear, all right, and fear passes the baton to greed, and greed takes off. But there's a moment where both fear and greed have their hand on the baton. There's that split moment. Now, what does that moment of transfer look like? What if I told you there's 7 pictures of that moment? And all you got to do is learn the 7 pictures. There's 7 ways greed passes the baton. 7 pictures. And there's 7 ways greed passes the baton back to fear, and there are 7 ways fear passes the baton back to greed. And if you understand these 7 signs that a shift has occurred, all the game is now is just weeding out those that don't work from those that work. All right. Anytime one of those seven things occur in your stock or the item you're trading, boom, protect yourself. All right. Wipe out those that go in the opposite direction. All right. Get rid of those and let the others flourish. That's all trading becomes. Once you know what to act on, everything is trade management. Everything is risk management after that. Now, sadly, most people don't ever get to a place where they know what to do. They know when to act. They don't have that. But once you know I act on these 7 things, now everything is trade management after that. All right. Okay. RSI says, yes, Oliver, but the 20-period moving average is different on all time frames. Yes, it is. But miraculously, you'll see that it has the same reliability no matter where you go, what time frame you look at. All right. So why don't we just take a look at that? Let me show you that. All right. I'm going to show you this. Wow. Bitcoin is rocking. But let me show you this, guys, just so that it's not just theoretical, right? You're looking at Bitcoin, a Bitcoin chart here. This is a daily chart. Now you see that 200 period moving average there. That red line is the 200 period moving average. The blue moving average is the 20 period moving average. All right. Now, look how reliably I told my traders, I told my Bitcoin trading club members that we were going to have a pullback, right? We're going to have a pullback because Bitcoin had rallied very decently off of its pivot low here. All right. It ran right into the 200. Okay. It's rare if something goes straight through that as if it's not there. This is, we're going to pull back a bit. Okay. Now that's on the daily time frame. Now, if you go to something like the here's the 15-minute time frame. Look at how it does basically the same thing. From here, rallies to the 200, and then drops back. All right. Even this starts obeying the 20-period moving average. Boom. I just changed the time frame, and the moving averages are practically have the same reliability. All right. Here's the 5-minute chart. All right. And what my traders will know here is that, listen, guys, the market is a breathing mechanism, right? So what it does, it starts off from a narrow state and goes to a wide state. From a wide state, it goes back to a narrow state and repeats. Wide. From wide back to narrow, repeat. Wide, look at the moving averages, wide. Back to narrow. Now we're going wide again. And from there, wide, we'll go back to narrow. Repeat, repeat, repeat. And if you know my method of trading, you'll know I teach you to get into the market during its narrow states. And we ride the wide. All right. We ride the wides. All right. We want this part of the cycle. See what I'm saying? You want this part. Oh, that's this part right here. You want this part of the cycle. You basically want that move right there. Boom. It's coming out of a narrow state. The moving averages are together, both of them. All right. And so you'll be very impressed to see that no matter where you go, what time frame, the same two moving averages have the same reliability. My tactics and techniques and strategies I teach you, some of which I share here on the channel, they're applicable in every time frame. All right? And you'll be amazed at how reliable they are. All right. Okay. How to stop snatching, Joshua's asking. So what Joshua is referring to when he's saying snatching, he's saying, how do I stop taking my profits so quickly? All right. And this is a malady that I struggled with more than anything else. I still do my best to keep this at bay. I've never been able to kill this demon. All right. I keep it at bay, but I've never been able to kill it. And I believe that this taking a profit really fast, I think this was built into my DNA because, guys, when I first started, you have to understand, if I wasn't profitable this week, I didn't eat. Do you understand? I had to be profitable. Otherwise, I couldn't live. Okay? And there was a tremendous amount of pressure on me. So what it made me do was it made me crawl through the market my first day or two. So the first day of the week, I would snatch at gains to build a cushion so that I could really start trading the way I wanted to trade. So what I would do is I would chip away at the market. Okay, here's $40. Boom. Here's $60. Boom. Here's $100. Boom. And I'd snatch it, a bunch of these little gains, right? And build up like an $800 base underneath me. And so now with that base underneath me, I'd say, all right, look, I'm not going to let $400 of this go. So I'm going to play around with a $400 amount to lose. All right, I'm going to try not to lose, but if I lose 400, I'm done. All right. And so I would snatch first, snatch first, snatch first, snatch first, snatch again, snatch again, snatch again, build up my base, and then start trading differently from there, a little bit more aggressively, a little bit more size, and try to hold on to the plays more. But that got so deeply ingrained in my approach that I could never really put it aside at bay. So what did I do? I do both. All right. So I teach you that your first profit take in a trade, the first one, should rarely be all of it. All right. There was a time I did not allow any of my traders to sell more than 50% of what they put on. So if they put on 1,000 shares, their first profit take could not be more than 500 shares. All right, this was a rule. It was baked into my approach. I no longer do that, but I do. They can sell now more than half on that first take, but they can't do all of it. They're not supposed to take all of it. And they're supposed to live through the first pullback. And this is what snaps that tendency. When you can get used to living through the first pullback, the snatcher is trying to get one fluid move and out, but the big money is in living through the pullback. Let me go over this. I'll show it to you. I'll show it to you again here. Check this out. Okay. So check this out, guys. This is the first run. You see Bitcoin's first run here? Boom. That's the first run right there. Now, if you snatch here, you miss this, right? Okay. But the trader who lives through the first pullback, see that pullback right there? The stock ran and then pulled back. If you can live through that, you're going to be a big trader. The big traders learn how to live through the first pullback after a decent run. Do you understand? And it's the traders that stay small that can't suffer through that. All right? And they miss what I call whales. This is what you're after. That is where the big money it is. It is not here. That's the small money. The big money, see, this is the small money. The big money is this. That 1, 2, 3 move. And you've got to learn how to live through that. And that's not easy, traders. It's not easy because when you're watching you've got $800 in profits, okay? And you take half of the position off. Good. Okay. Now you have still open profits, and you're watching your open profits disappear on the pullback, get smaller and smaller and smaller, and you live through that. You know, and a lot of traders have trouble watching their P&L go down. You know, but if you don't get used to that, if you can't get beyond a temporary pullback, all right, you'll never be a big trader. The big traders live through the pullback, the first one at least. All right. And so that is what we work on all the time. I am constantly working with my traders. Leave something in, live through the pullback, and add on the pullback. I want you adding on the pullback. That's the big traders. The big traders do that. They're not snatchers. If they do it like I do. I snatch and go for the big whale as well. All right, so you do both. You do both. You split the baby. Satisfy this voice over here that says, man, but you've got money. Take it before it disappears. Satisfy that one. And then satisfy the other voice that says, but there could be a lot more here. Remember the last time you snatched it, it went on to make a fortune. So you satisfy both of them. All right. All right. All right. Let's see here. Okay. So I'm getting a lot of questions here regarding wide and narrow and how your chart should be scaled. All right. On your trading platform, all right, you want your charts to be perfect squares. All right. I don't like the chart to be elongated because I see some people with like a rectangle like chart because they want to see more data, but they have it's squished down and long. That is going to give you a distorted view of your stock and its velocity. You need perfect even squares. So the same diameter here and there and there. It's a perfect square. That's very important. Very important. And make sure that also make sure everything is looking at you. Like, try to keep flipping from one stock to another. Try to keep that to a minimum. All right. The flipping, the people who are going through symbols like that, that I want you to try to stay away from. So all of the things that you trade, try to have them always looking at you so that you don't have to go to them. You don't have to type the symbol in or click the symbol. It's there already. All right. And you want them looking at you at all times. Okay. And this is how true professionals trade. I mean, their eyes are really, truly never really off what they trade. You know, they don't go to it and come back to it. It's just always there. All right. What else here, guys? Can you use the 50 only to help you in trades if you undersells over the 50 buy? Well, it's not that simple, but I would rather you use the 20 period moving average versus the 50 period moving average, right? For those purposes. The reason is because if a stock is flirting with its 50 period moving average, it's a weak stock, right? Okay. Because in order to get to the 50, a stock has to break through the 20. But if you use the 20 period moving average as your main moving average to judge momentum and velocity, and you require stocks to be above their 20 period moving average, you're going to grab the strongest of the strongest. But if you just require them to be above the 50, you're going to grab a bunch of weak stocks too. All right. Strong stocks don't greatly violate their 20 period moving average. All right. And the rules with this, the 20 is very simple. 95% of the time you should be trading in the direction of the 20. If the 20 is pointing up, you're a buyer on pullbacks. If the 20 is trending down, you're a seller. All right. It's as simple as that. And I can show you very quickly here. Take a look. All right. So if we go to, not that we sell Bitcoin, but I'm just going to use it just because the chart's here, right? But you see when the 20-period moving average is declining here? All right, see that declining 20 right there? All right, good. So I want, during a declining 20, you want to trade the stock in the direction of the 20 in this case. In this case, it's rising. Okay? And here the 20-period moving average is rising. So what are you doing when it's rising? You're buying above red. You're buying above red on pullbacks. Okay? And you're taking profits away from the 20. You see? Away from the 20. And you're trying to go in a little closer to the 20. Get out away, get out away. So the 20 is used for a lot of things. It's used for profit taking when your stock is far away from the 20. Profit taking when the stock is near a rising 20. Look for a color change. And it's a directional guide. I think I remember mentioning this to you. I did a 6-month study on my traders trading. I took losses across my firm, all losses, okay, over a 6-month period. All the traders' losses, and we looked at them. 86% of the losses were trades against the 20-period moving average. So meaning that if the 20-period moving average is rising, this losing trade was a short. It was shorting against a rising 20-period moving. 86%. That's huge. The majority of your losing trades, I promise you, they break that rule. That you're buying and the 20-period moving average is declining. You're selling and the 20-period moving average is rising. I guarantee you that's more than 2/3 of your problem if you're consistently losing right now. All right. The other part is position. I won't talk about that now, but my traders know this too. If I can get direction right with you and position right, now it's just let's keep our losses under control and let the numbers fall where they may. All right. All right. Ark, I see your question here. Ark is saying, have a hard time seeing the Fab 4 tight or wide. Sometimes I see them tight and they're $2. And well, listen, your question is sometimes tight looks like it's $2, a $2 fabulous 4 zone. And sometimes it's 30 cents. It's relative to the stock, right? There's no number for a narrow Fab 4. A narrow Fab 4 for Apple is going to be different than a narrow Fab 4 for some stock that's trading at $14. All right. But it's narrow to itself. It is not narrow in comparison to another stock. So you can't look at it like that. Right. Is this narrow based on Apple's history? All right. This is narrow. And this comes down, guys, you've got to become intimate with what you trade. This trading something that you're not familiar with is really the most novice move. Professionals don't trade what they don't know. They're so intimate with what they trade that it's almost like the stock is their child. You know when your child's lying, when your child's sad, when your child is happy, And so if you're intimate with your stock, you'll know when it's in a narrow state. you'll know when it's in a wide state. You know, these are fairly basic things, but it's relative to itself, not to another stock. Please keep that in mind. All right. Hey, Oliver, I'm working, Freddie saying, I'm working a 9 to 5 job and I don't have time to trade because the market closes by the time I leave work. Any tips on how to improve my trading with this work schedule I currently have? Why don't you trade? Why don't you trade forex? Now, I believe that forex, you have to go to bigger time frames when you trade forex, like, you know, the hourly chart, or I wouldn't trade lower than the 30-minute chart, maybe the 15. But at any rate, perhaps maybe that's an answer for you. All right. But I also, there's a my there's my trading sim, right? That is run by two friends of mine. The company is run by belongs to two friends of mine. We've been friends for a long time, but they have a really nice product for practicing. It's called My Trading Sim. All right, and this will allow you to actually trade what has happened in the past without you knowing what's next, right? So you can also, and various other platforms have this too, but you can speed up a morning. So let's say, for instance, you want to trade the market from last Wednesday, all right? You want to trade the first 30 minutes. Well, you can speed that first 30 minutes of market play up to happen in 6 minutes, you know? And so a lot of my traders who are trying to get good at trading the open, they will trade 6 or 7 or 8 opens before the market opens itself, right? Real fast, get themselves in the mood. It's a great thing. You should try that. But I would consider maybe trading a market that is open during the times that you're available, and also I would consider a platform like My Trading Sim to start getting your skills sharp. All right. All right. Inga saying, why should you trade larger time frames in forex? Well, it's large because, you know, first of all, when forex gets going, it's truly a trendy market. It trends. When they trend, they really trend. And the bigger time frames capture those a lot easier. The smaller time frames take you out of those trends. When you have a market that has the ability to trend a long time, when it does trend, and forex is like that, you want to trade that with bigger time frames. If you have a market that is a little more non-trendy, meaning that, all right, you might get a move, but then the move is over like in 14 minutes or 18 minutes or something like that. All right, and then the trend changes, or the move changes, or the characteristics of the play change. That's more of a small time frame play. You know, it'll capture, the smaller time frame will capture those kind of short-term swings. But in a trendy market, you want a larger time frame that'll keep you in longer. All right, so trending markets get longer, bigger time frames. More erratic, shorter term move markets, you want to trade that with like a 2-minute chart or a 5-minute chart or something like that. All right, Vanta saying, how do I find blue chip stocks for a small account under $1,000? Wow, Vanta, I'm just not a fan of trading with accounts like that. You know, it's very dangerous to to try to develop your trading skill in an undercapitalized account. The reason is because it will force you to be actually really bad. A small account forces you to sell when you're not supposed to sell, but the account forces you to sell. So it forces you to do the wrong thing. A small account forces you to actually start getting nervous and scared when you shouldn't be nervous and scared. But the smallness of the account forces you to feel this way. So I've just seen traders go backwards when their account's too small. Meaning you start to develop really, really bad habits. And you got to be really careful with this, traders, because you can get remember I told you that the snatching got rooted deeply in my trader DNA, and it's something I deal with to this very day. All right. You can get bad trading things baked into your DNA, and you will never recover from them. Like, no matter what you do, you can't undo it anymore. It is something you will live with forever. And you got to be careful. How you start is so critical. Do you understand? And, I'm not trying to sell you on anything, but you really should consider one of my programs that gives you the proper amount of capital to trade with. All right, and trains you to do that. You should really consider that. There are no stocks that are appropriate to trade with $1,000. Zero. Just so you know. Sure. So is it you feel that you lose it all if a small account? You're going to lose it all. It's guaranteed. Guaranteed. All right. I know all the stories you hear about someone started off with pennies and made millions. Yeah, right. All right. It doesn't happen, guys. In Disney movies, maybe, but it doesn't happen. All right. Or at least it doesn't happen regularly. All right. Can we be financially free with only trading? Is it possible to earn your living as a trader? Of course it is. But I will tell you that very few people who try to do that actually succeed. So the statistics are truly horrible, to be honest with you. It's 92% failure rate. But guys, look, in virtually anything, there's a high failure rate, especially if the activity calls for the individual to gain some degree of control and discipline over themselves. How many people are truly disciplined? All right. So trading is one of those activities that requires that you master yourself first before there is any chance of you mastering the market. This and that alone will make this activity have a high failure rate, because most people don't ever do what they know they should do. You see, the problem is not in the knowledge. The problem is not in knowing, not in the knowing. The problem is in the doing. Excuse me. Knowing what to do is no guarantee that you do it. And so because this activity requires discipline in that way, it will always have a high failure rate. Okay, it's not working on an assembly line and putting a cap on a bottle, and here there's the next bottle, and I put a cap on the bottle, and then the next bottle, I put a cap on the bottle. Like, that can be done mindlessly. But trading is psychological in nature. And so because of that, it's going to have a high failure rate, right? So the number is 92%. Now, anything worthwhile is going to have a high failure rate, right? Anything that, if you're successful at it and it's amazing for anyone who's successful, it's going to have a high failure rate, all right? You want a great restaurant? Restaurants have high failure rates. Business in general has a high failure rate. All right. But I want you to go into this with your eyes open. And I don't want you thinking that it's easy. It's easy. It's not. It's simple, but it's not easy. And I want you to understand that the odds are against you. That's right. And this disappoints so many people. And I don't really get it because I want it to be hard. I wanted this to be hard. When it was explained to me that the vast majority of people cannot trade well, I was like, well, where do I sign up? I mean, I didn't want an activity where everyone and their grandmother can do it. Like, what's so special about that? Like, if trading was something that everyone from a little kid all the way to people 95 years old in a wheelchair can do very well, like, then is that even worth pursuing? No, I want this to be hard. I want the failure rate to be high. That's the only reason I can raise my hand and say, I'm one of the few. All right. I wanted this to be difficult. I wanted this to be a challenge. I wanted to be the 8%. That's what drove me. That's what made this activity so special, because the vast majority of people can't do it. And if you can become one of those, you're in a very, very special club. You understand? And so I say it shouldn't disappoint you that this has a high failure rate. It should motivate you. It should make you do your absolute best to become the 8%, one of the 8%ers. Restaurant rate of failure is 90%. Yeah, most things worthwhile are. All right. Realtor says, commit 3 years at 110%. And if that doesn't work, commit another 3 years. Yeah, guys, it took me about 6 years, a little less than 6 years, but almost 6 years to really make the turn. And it was a very, very dark period for me. All right. Very dark period for me. Not cool, not good. But I remember what made a shift was when I experienced my first real shift when I gave up trying to become profitable by a certain time. It's like I almost embraced the idea that maybe I'll never be profitable. So what? So what? I still love this. This still makes me feel alive. And I'm going to do it until I die. Whether I'm good at it or not. I took that attitude one day. And strangely enough, that's what helped me experience my first shift. Now, I'm not saying the shift was going to profitability, but I can identify that turning point when that pressure of, but I gotta be profitable. I dropped that. You understand what I'm saying? And it just made me, I guess, different. It made me approach the markets differently. The attitude was different. The pressure was relieved. And so, hopefully you don't have to put a time on it. You might be the trader who gets it in 18 months. You might be the trader who gets it in 18 years. But if you love it, all right, who cares? All right. Realtor says, yes, I freaking love this game. It's an amazing game. It is a teacher. Trading is a teacher of life. It is an activity that compels you to investigate yourself, to look within. It's spiritual in nature because you have to become reborn. You have to become better. It is not the work on the market. If you stay with this long enough, you realize the opportunity is not in the market. The opportunity is in me. The market is neutral. All right. And based on me, what I get from the market is my creation. It is not what the market gives me. It is what I carve out of the market with my decisions. The market doesn't have decisions. The market doesn't have rules. It is ruleless. The market doesn't have law. It is lawless. The market is chaotic. It doesn't have order. So trading requires that you bring those things. The market doesn't have them. The market doesn't have laws, so you have to bring the law to the market. I will not lose more than $300 on this trade. I will take profits at this level. Those are laws. You bring the law. The market doesn't have laws. The market can't stop itself. You must stop the game when the game should be stopped. Do you understand this? You must bring order, your trading plan, to the market. The market doesn't have order. You must bring the tactic, the technique, the stop out points, the add points, the rules for adding. You bring all of these things. And so you can get yourself into this trap where you're constantly looking for the opportunity in the market, but it's really in you. And largely, it's just doing what you know you should do. I find that the vast majority of my traders who are not doing it, not getting it well, they don't need to know anything new. You know, they just need to do what they know already. All right. And like I said before, knowing what to do is no guarantee that you do it. But I find that, you know, a lot of traders can get into this trap of thinking that because they're not trading well, they need the next thing. They need the next indicator. They need the next trading platform. They need the next program. They need the next platform. They need the next mentor. But what a lot of them need to do is stand still. And now let's put to work what you already know. You don't need another thing. Let's just do it. But yeah, the activity is special because it forces you to work on yourself. And it forces you to become disciplined. It forces you to keep your word. What is a stop loss other than your word? Do you understand? And so it elevates you and therefore elevates your life, because I've said this 1,000 times. If you become a more disciplined trader, it is impossible to not become more disciplined in every other area of your life. You see, discipline doesn't just stop working when the market closes. If you have become a disciplined trader, the discipline doesn't get turned off. It stays with you 24 hours. Like, you can't become a better trader and not become a better human being, a better person. Do you understand? It spills over into every other aspect of your life. every other corner of your life. And trading is connected with live traders. It has all the elements of things that we experience in life. Like, when do you cut a bad person out of your life? When is it time to end a toxic relationship? When is it time to kill a stock that's not doing the right thing? It's the same thing. Your relationship with this trade is like the relationship with someone in your life. When is it appropriate to double down on a trade? When is it appropriate to double down on a relationship? Or double down on a business opportunity? Right? Sometimes we have to add something to a relationship, right? Sometimes you have to add to your trade. You've got to know when to enjoy it as well. You know, it can't all be work, profit taking. You got to enjoy the fruits of your labor, right? Profit taking. You have to pick quality people to be around you. Isn't that your trading list? Quality stocks. This is my quality stock list. And then before you act, you have to make sure that certain criteria is met and that this has risen to be, without a shadow of a doubt, what should be acted on. All right. That's a life skill, to know when to act on something that is good. To be able to define, this is good, this is not good. That's a life skill. Trading has it all. And so you can't become better in trading and not become better in everything else in your life. It is impossible. This is another reason why it is spiritual in nature. All right? It elevates the soul, it elevates the individual, and in turn it elevates every other aspect of that individual's life. Trading is truly divine. Nick Kerr, happy birthday to you. Nick Kerr, I hear it's your birthday. Happy birthday, my boy. Happy birthday. Yeah. Oliver, when do you use the 50-period moving average? You can use it if you want to. I just don't use it because I'm dealing with the strongest stocks out there. So the 50 is irrelevant if I'm looking for stocks that are trading above the 20, right? Isn't a 50 irrelevant? And if I'm looking to short stocks that are under the declining 20, isn't the 50 irrelevant? Right? It's too far away from the action. All right. So I just don't use it because I'm looking for the strong of the strong, or either that the strength is to the upside or the strength is to the downside. All right. Oh, guys. Whoa. Our time is up here. Okay. Last question here I'll take, guys. Look, how do I know when in my development it's time for me to focus on narrowing down on what I'm good at to trade for profits rather than trade for practice and just to gain experience? Good question. Look, it's important to understand that the first goal is to get experience. You need a tremendous number of trades under your belt. All right. This is very important. All right. Your success is on the other side of experience. So if you feel that you have reached a place where you have a very solid base of experience, you can start to narrow down things that will, in a way, maybe make you more accurate, but also will limit the experience building. But if you've already done that, then the limiting of your experience for quality is okay. You just have to be careful, because if you're not done accumulating this experience, you should be going the other way, in a sense. So just be careful with that, because remember, guys, in order to become experienced, you need a lot of losing trades and a lot of winning trades. You need them both. You can't become experienced with just winning trades. And I know all of you are after that. It's crazy. Like, everyone wants to win only, but you will never be a master if you don't have the other side. You've got to experience every possible way to lose thousands of times. You have to become so intimate with every possible mistake that can be made that you stop making it, because you're so familiar with it. It is what you become familiar with becomes easier to conquer, right? And so, but trying to keep it at bay keeps you fearful of it, scared of it. But you've got to go through it. You've got to go through loss. You can't go around it. You got to go through it. And at a certain point, it's all behind you. Do you understand what I'm saying? And so, just make sure that you can do this narrowing down, but just make sure that you do not do that at the expense of doing a lot of trading. All right? Because that's what the vast majority of you guys need right now. You need to be able to trade a lot without the fear of losing. You need to trade knowing that loss is necessary right now for me. And it changes the mental attitude. You understand? Okay, it changes the mental attitude. Find a way to practice, guys. If your account's little, I would stay away from that. Practice on paper if you can. Join a program like mine if you can, that provides funding for you or something. But find a way to practice in some way. You do know what the law of practice promises. It is impossible to not get better at something you keep doing the right way over and over and over again. That's the law of practice. It's impossible. That should be motivating. That should be encouraging. You just have to know what the right way is. But once you know the right way to do something, and you keep doing it the right way to the best of your ability over and over again, even if the results are bad at first, you can't not get better. It's impossible. It's freaking impossible. But you've just got to keep going, traders. You got to keep going. All right, guys, for any of you who are interested, all right, I want you to consider my baby here. This is my baby. April 23rd, 24th, and 25th, we kick off the next live trading camp. Everything's online, but we will trade live together for 11 weeks. All right. I will teach you every single tactic, every single technique I use for trading the first 20 minutes of the trading day. I want you 20-minute trading masters. I want you to be able to support your entire life from 20 minutes in the market. And this is what I focus on in this event. We carve out that first 20 to 30 minutes of the day, and we drill down to know specifically how to turn this into a consistent revenue stream. All right. The first 20 minutes of the day is one of the most special times of the entire day. All right. And so remember, this is an 11-week program. We kick it off with this 3 days in a row. And then after that, it's 11 live trading sessions with me in the morning over an 11-week period. All right. So I want you to consider that there is a cost, of course, associated with that, guys. It was $1,500. Bring the price down for you for $997. All right. So that's cool, guys. Look, it's a dinner with a couple of nice bottles of wine with your family. All right. And this will deliver for life. All right. What you learn here will deliver forever. I want you to know that. All right. So make sure also, guys, that you are speaking to one of my people here. There are many imposters out there that try to trick you out of your money. Please, I will never pop up in your DMs. I will never say, hey, how's your trading going? That's not me. Make sure you're dealing with one of my people. Here's the list. All right. Check, double check, triple check. All right. Hit the like button. All right. Make sure you subscribe to the channel. Guys, if you haven't done that yet, all right, I spend a great deal of time making sure that every single day there is something uploaded that will help you take one additional step toward that ultimate goal of becoming a trading master. All right. Guys, I want to thank you for your support. I want to thank you for all of your comments, all of your questions. I want to thank you for your participation. You are, in part, the reason that I breathe. All right. Ciao for now, guys. Love you to death. Yeah. All right. Woo! Another one in the bag. Boom. Ciao. Yeah.